the stock market has a huge risk of crashing, or at least going down about 20 to 30% from this point in time. And there are a lot of reasons why. For one thing, stock market S&P is valued about 19 times earnings. It's relatively, I wouldn't say it's cheap or expensive, but it's still on the higher end, and you can definitely wait for it to reach around 13 times earnings. There's also a lot of things that the stock market is pricing in. They think that there are actually going to be rate cuts by the Federal Reserve this year, and not only one rate cut, but possibly two. So that's a little bit strange. You think, why would they assume there would be rate cuts? The Federal Reserve said there would not be rate cuts. So the stock market is a little bit optimistic. Also, most stocks are not even participating in the rally that we've been experiencing. It's really just a narrow group of tech stocks, and it really is, that's not really the kind of sustainable rally that's going to actually lead towards a good outcome. So I think a lot of people would benefit by not being in the stock market at the present time, because despite the fact that everybody's getting excited and there's some headlines about the bull market beginning, it just isn't there. Also, you have a lot of things that also suggest we're not anywhere near a boom. You're getting banks collapsing. You get two banks back to back collapsing due to the fact that they made mistakes with their interest rate management. And you're going to start seeing unemployment going up, which will be another sign that the economy is in recession. And in general, it's not good times. A lot of stocks are just going to be collapsing due to the full weight of the higher interest rates really starting to hurt the stock market quite a bit more from here. So what else supports my thesis that the stock market is going to be going down? A lot more money, more and more money is headed into the money market funds. That's another sign that we're in a recession that's coming on. Property prices are going down the toilet and around the world, including commercial real estate especially. You're starting to see that starting to fail, which is causing problems for the regional banks. You're also starting to see more and more money being taken out of the stock market, being headed into towards cash. Also, if you look at oil prices, it really can't catch a bid, which also is another indication that it doesn't really matter if OPEC is cutting back on production. It's still not really going to the moon. You would think that it would, the fact they're cutting back would cause prices to increase. Well, not so much. Also, China's reopening is kind of a dud, despite the fact that they produce a lot of the things that people buy around the world. It's not really it's not really a super bullish environment over there either. It seems like their whole reopening was kind of a dud. So this is going to be pretty massive recession. I think a lot of people are not really predicting it. I think that's the way these stock markets work, is that it makes you think, oh, things are getting back to normal again. I don't have to worry about things, and I can be happy that the stocks are going to go to the moon again. And even crypto has started to move up, and that's getting people excited. But the truth is that Federal Reserve has raised rates, and M2 is actually a sign the money supply is decreasing. And it's really just it's like one of those, it's going to be one of those nasty recessions where a lot of people lose their job and the economy slows down to a halt and stocks will be collapsing. I mean, it's really going to be the best environment for people with cash. And then you have the debt ceiling issue as well. Congress is fiddling with that, and I think there's going to be, because they're fighting about it, and there's really not going to be an agreement. There may indeed be what they call a credit event, where stocks collapse quite dramatically, and it causes Congress to say, oh, we got to act a little faster. But in a way, that actually may prove to be an interesting buying opportunity for people, because things might actually get so cheap that it might be irresistible. Like if it, like stops, S&P reaches around 12 times earnings, something like that. Anyway, I hope this video was informative. Stock market crash is ongoing. Stay safe. Click the like button. It's always important that you do that. And subscribe, and I'll see you in the next video.